All right. Good morning. Hope y'all are doing great on this early Saturday morning. I'm coming to you from my brother's office in Jacksonville. We travel over here from Tampa the last weekend of every month. And this weekend, we're going to the air show at Jack's Beach. So, super excited for that. After I finish this session, I will be headed to the beach house to enjoy the air show. So, good morning, Mike and Deepak, J Van. Good to see all of you. We're going to get started. First, I want to note the sectors in the market that are showing the most strength. Then we'll look at the ES futures chart just to get an idea of where price is at, where price could be going, and to show you that we are in a bullish market. I'm sure all of you know that. We made new all-time highs both in the Nasdaq and the S&P 500 yesterday. So pretty obvious we're in an extremely strong market. That's why for swing trades, my focus is on bullish setups. So that means I'm going to start at koifin.com and I look at US sectors and then I go from a top down approach, starting with the 3 month look back. This list gives me an idea of the top performing sectors in the market, and that helps me to build my watch list for my swing trades. So you can see that gold miners and metals and mining are still up here at the top on a 3 month look back, then semiconductors and tech, followed by oil services coming in here at number five. But notice that utilities and healthcare have moved up in this list over the last couple of weeks. So I do have some utility names on my watch list as well as healthcare names. Then I go down to a 1 month look back. I'm going to do it month to date because we are at the end of October. And so I'm just going to look at the month of October so far as the names that are leading the way. Semiconductors are very strong right now. We're in the middle of earnings season. This makes my watch list a little more complicated because I don't typically trade through earnings for shorter term swing trades. So I wait until after earnings have hit. I want to know where those buy zones are in strong names. And then after they report earnings, if price comes down into those buy zones, I like to be ready. Semiconductors are at the top of the list here as far as the month of October goes. Then metals and mining, again, oil services, healthcare, and utilities, with tech coming in just below there. But if you hover over the tech sector, you will see that it's definitely heading back up after consolidating the first couple of weeks of October. So I have tech names on my list. I have some utility names, healthcare names, metals and mining, and semiconductor names. Good morning, Sander. Good morning, David C. Good to see all of you. Now I take a look at a 5 day look back. That would be last week, basically, just to get an idea of any kind of standout rotation. So oil was strong last week, relatively speaking, but from a year to date look back, oil is super duper weak. But you can see that last week, oil services and oil and gas producers were top of the list. Then you have regional banks. I like to use this sector if I'm interested in trading IWM, the small cap, the Russell. Um, that gives me an idea that the Russell was pretty strong relative to the other sectors. Good morning, Darren. Then you have tech, which I said last week was stronger relatively to other areas of the market. Jets, that's your airline sector. There were several names that reported, and obviously they must have done well because Jets was up almost 3% over the last 5 days. Then, of course, energy. Again, going back to the strength we saw in oil last week and semiconductors down here up to almost 2.5% over the last 5 days. So, not really a lot to see there. If I were looking for longer term plays, I would definitely look at some oil names just to see if any were coming down or setting in high time frame buy zones because there is some hope, so to speak, for oil right now, just based on the relative strength it's seen over the last week. But right now, I don't know if all of you are aware, but Trendy John and I are doing an account challenge that starts on October 30th in the Trendy Room at Simpler Trading. And so I'm trying to keep my book clean going into October 30th so I can start out with a fresh, no positions on for that trendy account and see how we do. I always reset my account to $5,000 balance and go down to $500 allocation on any of my day trades or swing trades. And just, I like to start it with the same amount each time so that I have an idea over that 30-day account challenge how I do. How does the account perform during that challenge? So, for right now, I'm not looking at swing trades that I'm going to keep on for weeks to months. For that reason, I am focusing more on the shorter term swing trades that I could possibly put on Monday and have off of the book by Friday. So, now that we have covered where the strength is, I'll draw your attention to my bullish watch list. I have some futures names up here just so when I'm looking at this, I can see what the futures are doing. And then you will see names on this list that include those top performing sectors. Anywhere from Apple in the tech sector to AbbVie in the healthcare sector, Abbott also healthcare. Then I have some oil, or sorry, not oil, uh, gold names on here, metals and mining names on here. Of course, semiconductor names, some tech names, and then also Amazon and TSLL, which is what I use to trade Tesla because I trade from a small account. Give me 1 second, guys. Sorry about that. Because I trade from a small account, I trade TSLL if I'm wanting to trade Tesla. So I have TSLL on here. Actually, the pullback in Tesla on earnings didn't pull back a lot. It's been pretty flat actually, but it is coming into close to a buy zone on TSLL that I would like to play next week. If we see some weakness Monday morning and price drops into that buy zone, that's a trade I'd like to have on for next week. And I'll give you those levels here in a minute after we first look at the ES from a top down approach and talk about the price action this past week. This is last week's weekly candle after we created an inside candle the week before. This candle indeed closed above the initial candle, and that makes it an inside up formation. Now, I did not make this buy zone green on the ES weekly chart, and the simple reason is because it wasn't a powerful move, so to speak. It closed up about 60, 50 points above here. And so it wasn't a super powerful move. Hold on one second. Here comes Mowgli. Granny's working, okay? He's asleep, baby. I love you. You see that wild hair? We call her Einstein because her hair. Sorry, guys. Anna, good to see you. Darren, I can't remember if I said good morning. Good to see you. All right. So it's a gray box for now, but if this next week we continue this push up and we establish some range away from this zone, I will color this green on my chart and call it a solid buy zone. But for now, a buy zone that is solid that we had a sustained rally out of is down here at about 6,500. That's going to be a key level from a big time frame perspective of focusing on if we were to get a big pullback. This is the area that I'm really interested in on ES weekly chart. Now let's go down to the daily chart and look and see what we have here. Last week we spent much of the week consolidating. Before Friday, we got a nice move. It's very similar to the prior week where we consolidated for several days. Then we get a move, then we consolidate, just chop range bound, and then we got the solid move on Friday. This is just a stair step up, guys. We are staying above the daily cloud for now. We did close below it back here on the 10th of October, but pretty much this cloud has been support. So, of course, I would want to know where the top of that cloud is. It's going to be at about 6750. Important level for next week on the ES would be that 6750. So if we were to drop back about what is that, 75 points, then I would be looking for buying opportunities on basically anything on my watch list because the overall market would be at that support of the daily cloud. Looking at the 4-hour chart for the S&P 500, 6736. This is a nice buy zone down here for trades that I would be looking to be in for the week. The yellow lines on my chart are weekly trendy edges. These represent the lower edge represents a buy zone for a trade I intend to be in for the week. Price often travels between these levels. The upper zone up here is representing a sell zone, although I'm not super eager to short this market here. Now, day trading is a totally different story. I absolutely love day trading SPX, and I will go short from zones for scalps and intraday trades. But as far as swing trades, which is what this session is about, I have nothing on my list to short. All right, because the trend is green green, and green. No shorts for me in a bullish market as far as swing trades go. All right. So now that we've established that we are definitely in a bullish trend, and my focus is on trades buying the dip in trendy buy zones, now let's go through the list of trades. I mentioned when I first got on that we are in knee deep in earnings season and that I do not like to carry positions through earnings unless it were a runner type contract that I had collected profits on, and basically the trade was free because my profits outweigh the cost of the remaining contract. But I'm not in that scenario, so I'm not going to really focus there. But Apple has earnings on, I know it's next week. Yes, the 30th, so October 30th. I do want to key in on some levels, though, that if Apple were to miss on earnings or the market didn't like what the earnings report said and we were to pull back, Apple's a buy for me down here at about 240 to 225. On the daily chart, 252.29 to 244. This is an area where, after a large imbalance candle to the downside for 1, 2, 3, 4, and 5 days, Apple just consolidated in this range. And then we got that gap up. That is a nice area to focus on in the event that Apple misses on earnings. A pullback into 252 by 244 would not be surprising, and even lower if it wanted to, because you have this bull bullish golden pocket down here, and then this very nice buy zone all the way down at 230. And it has not been tested. Price has not revisited there. But the first zone that I will be focused on after the earnings report is in here. If price drops down into this zone, what I like to do is wait for confirmation. There's nothing I hate worse than catching a falling knife. So I'd go down to a smaller time frame chart and we would be in this green zone. I would be looking for higher lows inside of this zone, followed by a breakout candle. And I will typically watch 1 hour or 2 hour candles for that formation if I'm trading out of a daily zone. So Apple's not going to be on my focus list. But after earnings, if we are to get a pullback and it pulls back into one of my key zones here, either this buy zone, this golden pocket, or this buy zone, then I will be interested in trading at post earnings. All right. I mentioned AbbVie, and I believe AbbVie is reporting very soon as well. Yes, on Halloween, next Friday, AbbVie is reporting. The zone of interest after that earnings report on a pullback would be 220 to 214 from that weekly chart. And on the daily chart, it's actually right at a buy zone here. You see the inside and up candlestick structure. I have a weekly edge here, which tells me, hey, take a look at the 4 hour chart to see if you have a zone to trade, possibly edge to edge. So if I go to the 4 hour chart, what I'm doing is I'm looking at where price is currently at. Then I want to look down and to the left, looking for an imbalance candle after a period of consolidation or inside candles. And you can see right here that 223 to 220, that is my zone of interest here. Now, They report earnings next Friday. So, do I get the pullback before earnings? I highly doubt it. And it's why AbbVie is not one of the six names I'm focusing on. But I do want to know where that zone is in the event we get the pullback into here and we are past earnings. I can look to make a trade there because healthcare sector, as far as some rotation goes over the last couple of months, has been showing great strength. All right. So AbbVie is just one that is on my list to watch after earnings. But Abbott, also in the healthcare sector, is a different story because Abbott has already reported earnings and we got that pullback that I was looking for into a weekly buy zone, very close to this daily buy zone and very close to a lower weekly trendy edge. So for Abbott, I am focused on the zone of 125.58 to 123.25. Again, if price pulls back into this zone, this is a lower weekly edge right here. If price pulls back into this zone, then I go down to 30-minute candles or 1 hour candles, waiting for a higher low followed by a break above the body. That's my trigger to go long. And I would be trimming at the upper weekly edge here at 129.27, then 131.16, ultimately targeting 134 by 136. All right. Now, from a risk to reward perspective, this trade has to make sense for me. So 125.58 to 123.25 would be my buy zone. A stop would be a 4 hour candle close below 123.25. That's going to give me a risk of about $2.25. Then I need to look at my first area of resistance. This purple line is a monthly edge. It's a lower monthly edge. One second again. All right. It's a lower monthly edge. So it absolutely is now resistance and it's at 128 and a half, which is about $3 above. So my first trim would come at 128 and a half by 129.27. I need to see, is that at least a 1-to-1 risk to reward? And it is. So that makes Abbott a viable name for me to trade next week. Now, this target all the way up here at 134 to 136, if I'm only planning on being in this trade for a week, I have to take into account the weekly ATR, which is 5.77. Let's just call it $6. So if I'm getting in somewhere down here near 125, $6 puts me right here at my second target. Now, I am going to clear my book after next week, right? To start off with a fresh account. But if you follow me on this trade and you obviously don't need to clear your book for an account challenge, then the plan would be to enter in the buy zone to trim here at 128.5 by 129.27, and then trim again at 131.16 and ultimately target 134 by 136. 134 by 136 means that you would want to buy at least 2 weeks to expiration. If we look at the option chain, you can see that I would not be buying next week's expiration. And the reason is there is very low open interest in those strikes where I like to trade it, which is at the money. But you see here, at the 125 strike, there is enough open interest for me to trade this name. So I would be buying the November 21st strike, even though I don't plan to hold this in my account that long, I would still need to buy the November 21st because of the liquidity and the open interest there. So I need it to be the contract I'm buying, I need it to be liquid, I need it to be affordable. And 125 strike is going to be that for the November monthlies. So the plan would look like this: an entry in the buy zone. These are my trims, and this is the ultimate target. A stop would be a 4-hour candle close below this buy zone. Life in Sarasota, good to see you. Good morning. You're right down the coast from me. Now let's look at AEM. It reports earnings this week as well. And from a weekly time frame perspective, if I look at AEM, and I'm not even sure what this chart's going to show. Yeah, I have not charted this in quite some time. So let's chart it together on this weekly. I'm going to mark this all time high here, and then I'm going to look down and to the left, looking for the inside and up candlestick structure. So we have an inside candle followed by an up candle with a very nice continuation move there. Notice right below, though, we also have inside and up candlestick structure. I am combining these zones to give me a very wide weekly zone. But if I were trading off of this weekly chart, this would be something that I would be buying out to like January or so. So, on a pullback, on an earnings miss or what have you, on the weekly chart, 134 would be that zone. And now let's look at the daily chart, though. AEM is actually inside of a buy zone right now. It was a previously untested until last week. Last week, gold showed weakness. All right. And so, of course, AEM also is going to show weakness on the chart. Now, this buy zone held, we had no candle close below it. So it's still on my chart, but this zone down here is my next area of focus. So let's just take a look at the option chain because I know that they report inside of this expiration. The market makers are looking for a 5-point move. So you can kind of get an idea. A 5-point move would put me where? Inside of this zone. So even though I'm not going to take a trade on AEM before their earnings, I know that if it indeed trades to the downside and it moves the 5 points that the market makers are expecting, it would put me down near this daily buy zone. And I would want to know that for a trade after earnings. So that's why I left it on my watch list, even though I know I'm not going to trade it next week, is because I want to see on earnings if we get into this buy zone and I can possibly look to trade this out through the end of the year. All right. Now let's look at AMAT. AMAT reports earnings. I got a little time here, right? Because they don't report earnings till the middle of November. So this is a trade that I like the buy zone, although it has been tested. We consolidated here at the beginning of October. Then we moved up and made a new all time high. Price did pull back into this zone on the 22nd. So just a few days ago, it pulled back into this zone. You see why I love trading the trendy edges is because price moved from the lower edge, and in one day move to the upper edge. That is a nice indicator when you just want you or when you know to buy a dip at a lower edge and then your target is the upper edge. So for this week, a buy the dip would be the lower edge. And again, the target would be the upper edge on a mat. All right. Let's see. Earnings. Yep, I have over 2 weeks to earnings. So this is a possibility of making my watch list. But remember, I only want to trade this for next week. So I'm going to look at the 4 hour chart. I'm going to look at the buy zone, the lower weekly edge down here, and my buy would be at 218.86 by 213.70, which is the inside and up candlestick structure back there. Tested zone, about $5 of risk, and the reward is up here. I'm going to move this line down just a little because the upper weekly edge is my target, and that would be at about 229 and a half. So this would be about $5 of risk for 10 $11 reward. That definitely meets my risk to reward criteria. Now, the reality here is AMAT had a very nice, strong move on Thursday, and it came up into a sell zone, which I would expect resistance at. This is a tested sell zone. So, the reality for AMAT is this: price might not revisit this buy zone. A buy zone on the chart, think of it as an area that buy orders are setting. They were left behind after this move, and big money wants price to come back down there so their buy orders can get filled. Okay. They want to buy low and sell high. So price came back there. Since this has been tested, I have no idea if price will revisit it because the ebb and flow of the market is where buy orders are setting, price often returns to. But once the buy orders dry up and market makers don't need to get orders filled down there, it might not come back here. So, some other levels that AMAT might revisit would be a 50% retrace by that golden fib level there, basically 224 to 222. That might be all the pullback I get this week in trade for trading AMAT, but I just want to point that out. I'm going to leave this though as my buy zone. What I like to do is set an alert at the buy zone and just make a note here that it is at a 4 hour buy zone, and that way, if price were to come back down there, I know to look at my 4 hour chart and then take the trade accordingly. All right, Amazon, poor Amazon. It's kind of been just petering out. It's not really doing much. You can see by the 4 hour chart, it's stuck in a tight range. They report earnings on Thursday, and I want to know where those buy zones are in the event that it pulls back on earnings. 210 to 202, that would be the buy zone here on the weekly chart. And the sell zone is 230 and a half by 242 and a half. As far as the daily chart goes, your buy zone, which has been tested, it was tested about 9 days ago or so. It was from this inside and up candlestick structure. You can see that it worked really well. Price rallied $10 $7 from there. So it was a great buy the dip opportunity last week down near the lower weekly edge. Well, it would be a good buy the dip opportunity again at the lower weekly edge for this coming up week. And the target would be the upper weekly edge right here. But that would have to happen on Monday for me to trade it because it has earnings on Thursday. So Amazon remained on my list mainly just to know where those buy zones are at after earnings. Next up is AU. This is a metals and mining type name. They have earnings the middle of November. We saw some weakness in gold and metals in general last week. One more hug from the grandkids. Mowgli, wave to that camera so people can see you. There's Mowgli. Come here, Lee. And this is Liam. Wave to the camera up there. All right, now go leave Granny alone. Thank you. Sorry, guys. Yeah, so, with the weakness in the metals and gold, you can see the AU pulled down here into this beautiful buy zone. I loved that dip buy. I didn't take the trade because of needing to reset my account. But had I taken the trade, it absolutely would have paid to first target. So I kind of regret not going ahead and taking this trade last week. It's unfortunate. I should have just taken the trade. But I don't feel on my game when I'm gearing up for an account reset and an account challenge, just to be honest with you, because I'm so adamant of going in with a clear book. So, but I want to keep AU here on my watch list. The lower weekly edge is a little bit higher than my buy zone. So I'll move this price up and let's look at it from a risk to reward perspective. You can see that it would have about $4.50 of risk and about $4.50 of reward to the first trim, and then about $9 of reward to the next target. So, all that being said, AU again is a buy the dip opportunity down here between 65 and 60 with a trim at or about 70 and then targeting 74 to 80. All right. Barrick Gold, they report on the 10th of November. This is a play again off of metals and mining and gold, which has been super strong all year long. They did have some weakness last week, and it could have continued weakness. But the lower weekly edge for Barrick Gold is 30.86 and the upper weekly edge for Barrick Gold is thanks, Anna. Yeah, they just woke up. And I'm at my brother's house, and there is not an adult in the house that are awake for or that are up to watch them. So it could be interesting. But yeah, my dad and husband and brother are away at church. They have a men's group on Saturday morning. So they're gone, and my mom's still asleep. So we'll see. Anyway, so the total trading range for this week that I'm expecting is about $4.50 here. I want to buy low on that curve and I want to sell high on that curve. So I would have about a $3 risk and about a $4 reward, making it a viable trade for me. Um, Note that the daily 21 SMA is going to be up here around 33.40. That absolutely would be a place that you might want to trim off some profits if price gets up to there on the way to the target zone there on Barrick. All right. Up next is Cisco. Cisco reports earnings the middle of November, so I have some time. What I'm looking for with Cisco is Cisco consolidated up in here. I would love to see a pullback on Cisco to this bullish golden pocket here. Cisco had a nice run from the middle of October to last week, and then it just consolidated. If this consolidation turns into a quick retreat back to the bullish golden pocket, the daily 21, the monthly edge down here, I would like to get a position on to trade next week, and then I would trim at 70.01, 71.07, and target 71.86 by 72.55. From a risk to reward perspective, that's going to give me about a 50-cent risk and about a dollar reward to first target. So a 2 to 1. I like this trade and I do have it on my focus list for this week. A stop would be a candle close below this bullish golden pocket here. So I would commit to the candle, the daily candle close if price got down to 68.50. For that reason, there could be a little more risk than 50 cents, depending on where that candle were to close. But because I trade with an allocation amount I'm comfortable with, I'm all right with that. And Cisco, part of tech, is showing strength. And so it presents a dip buy on a name that I have time until earnings. The daily 21s lining up here with the golden pocket and a nice, this is not inside and up. But still, you had a consolidating candle and then a nice candle to the upside. So I got some structure here, probably on the 4 hour chart. If I were just to go to a 4 hour chart here and look, oh, look, see the 4 hour structure? Everyone see that? You have inside candles and then a nice explosive candle up. Y'all see that, right? You can answer me in the chat. I look at it from time to time. This 4 hour chart lines up great with the daily bullish golden pocket. Okay. So this would be my buy zone this time for Cisco. Again, if price comes down to my zone, I'm waiting for those higher lows followed by a breakout candle. And I'll use like a 1 hour candle here. And then I want to take the trade. So Cisco's definitely on my focus list for this week. All right, let's take a look at good old gold miners. Gold's showed some weakness, right? It had actually a gap down on Monday. I believe this is Monday's candle. And then it's danced around. No, that must be Tuesday's candle. So it gapped down on Tuesday. It danced around Wednesday, Thursday, and Friday. Here's the buy zone I'm looking for on GDX. I need further pullback. And in this zone, I would like to be a dip buyer for further out to expiration. So if I could have it any my way, right? I would prefer to see it in this zone come Friday after our account challenge has started and I can get a trade on choosing like December expiration on GDX and then trade this swing trade through the challenge. So that's my hope with GDX. I do not have it as one of my focus trades this week, but I'm leaving it on. on my watch list in the event that happens. Now, GLD came down into a buy zone for me. It was a 4-hour buy zone. I just couldn't find an expiration and a strike that I could trade for just that week or the next 2 weeks that fit my open interest and price affordability uh, factors. And so I didn't take a swing trade on gold, but it pulled back to 369. I believe that was the zone last week that it pulled back to right in here on this pullback on Wednesday. It wouldn't have paid a lot, but it did rally about $8. I remember the chart that we were watching in the trendy room, and it rallied about $8, and that would have been a good payday. I just couldn't find a option contract that fit my criteria. So as far as GLD goes, more than like it's not on my focus list for this week. But those of you that want to trade it, I wanted to give you some key levels. And that first one is going to be in this buy zone, the lower weekly edge at 372.62. That's lining up nicely with the daily 21. You got a confluence there. You can see that it filled this gap, right? From the inside and up candlestick structure. It filled this gap on the 22nd and it rallied nicely off of there. If it comes back down here again, this is tested. Okay. So the lower weekly edge to that gap fill, it has been tested. We could pull back lower. So my stop though would be below 362.83 in the event that gold trades down below 362.83. We have to look at this inside and up candlestick structure to have an idea of where it could be possibly going from there. But you have two zones back to back here, and you got another gap fill right in here. So, in the event that gold continues to be weak, you got some names reporting and the such. In the event that it is weak again next week, I would be looking for a GLD buy down at 357, maybe. I would watch it there, but that would create quite a bit of fear in the market, and there could be a further sell off there. So I would target this area here, 346.74 to 337.97. Now, all of that is hypothetical because we're at a buy zone. We could just continue ripping from this buy zone. All right. Now let's look at the good old Google. It actually reports earnings on Wednesday. So soon, right? Here are my buy zones after earnings on Google. You have a golden pocket buy zone here on the daily. That is where the lower weekly edge is lining up. Um, my anticipation is that a golden pocket isn't going to hold up a bad earnings. I would be more focused on this buy zone down here at 241 to 231. That would be what, well, you can see. I have an alert there. A buy the dip opportunity on a bad earnings. Now, I'm not anticipating a bad earnings or a big flush. This thing could just shoot off to new all time highs. It's very bullish, but I like to have these zones alerted to me if, in the event Google on earnings pulls back into this area. This is where I would like to be a buyer for some longer dated moves to the upside. All right. MP, it had quite a bit of weakness last week, and it has actually pulled back into a buy zone, and it is on my focus list. All right. The buy zone, the lower weekly edge, all of that is coming in here at 68.80 by 61.59. Now, that is about $7 of risk, so I had to look to make sure my first reward would be at least $7 or more. The upper monthly edge is about 79.30 and the upper weekly edge is 81.78. That's my first target on a dip buy here. This is my first target. But note the top of the daily cloud here at 7604. That is still at least a one for one risk to reward. So I went ahead and put it on my focus list. But this is my buy zone. Here is my stop. I'm wanting to trim in this area 76 to 81. Then the next trim's 87.10, and finally targeting 96.10 by 100.25. If you want to know where I got that 96.10 from, it's the 887 fib level. Okay, and there it is. And the 87.10 is the 618. All right, so that would be the plan for MP going into next week, and it is on my focus list. So again, stop goes below the buy zone, candle close. All right. And these are trims on the way up to target. All right. NEE. I love trading NEE. It's one of my favorites to trade in the utilities space. It reports earnings though on Tuesday. And so what I'm looking for is an earnings miss. Price comes down into my buy zone, and then I set up a trade for further out. December or January trade back up to all-time highs. That's why it's on my list. I'm just waiting for earnings, hoping, and I'm sorry if you are long NEE. I'm just hoping that I get a pullback buy on NEE down here in this buy zone. All right, NEM, this is another gold, metals, and mining play. It's currently in a buy zone. So I actually put it on my focus list for this week. And what I'm looking at is the fact that NEM closed right at the lower weekly edge. So on Monday, I will be watching this. If we can stay above this lower weekly edge through the morning craziness, right? If we stay above this lower weekly edge, I'm wanting to go long Newmont. All right. Now, where am I targeting? I'm targeting 89.03, 93.46, and 98.58. My risk is very small, and this would be Monday. On Monday, if we hold above this lower weekly edge, my risk is very small. It's a couple of dollars. My reward is about six. And I actually am going to move this down some to be more conservative, use the top of that cloud. So my reward is about, what is that, four and a half? $4.50, a risk of $2 for 4.5. I'll take that. Um, and of course, up here is crazy nice profits. All right. In the event that Monday, Newmont shows weakness, right? And we go below this buy zone that obviously has been tested and even it wicked below it on Friday. In that event, I remove this zone and I focus on this zone down here. Okay. Everybody understand that? I want to make sure so that you're not taken by surprise what I'm doing come Monday regarding NEM. Y'all good with that? You understand? Understand? All right. All right, moving on. Good old Nvidia, they don't report till the middle of November, so they're always fun to trade um, a little bit longer into earnings than others. Nvidia came back last week into this buy zone. It's now been tested twice. The buy zone for Nvidia, lower weekly edge, it's all lining up for about $5 of risk. Reward's gonna be about $8, that initial reward. So some targets, if we are to pull back here, this would be wait for a lower or a higher low followed by a break above the body using like a 1 hour candle. And then I'm targeting 186.24, 191.21, 195.62. That's the all time high. And then I have a little extension target up here near 200. This is a beautiful rounding bottom here, right at a daily buy zone. So, but remember, it's been tested. I'm waiting for confirmation to buy a dip. Stop goes below this zone, and that would be the plan for NVIDIA this week. Palantir, look, it's in a sell zone. It's been camping out here. Palantir could race off and take out 190. It absolutely is a possibility, but where it's at now, it's just not playable to me. The lower end of this chop is your buy the dip opportunity. So if you love to trade Palantir, my suggestion would be a buyer down here near 171. And then you're wanting to cover up here in the sell zone. All right, let's look at Southern. This is another utility play. I forget when Southern is reporting earnings. I think it's this week, I'm pretty sure. Yeah. So they're reporting earnings on the 30th on Thursday. Um, Obviously, this weekly chart is outdated because we have a new all time high, 100.84. So on Southern, I'm leaving this on my chart because on an earnings miss, a pullback by is what I would be interested in. And if you look down and to the left, we have a couple of areas of interest. This big imbalance candle right here. Notice the lower monthly edge for November. That's an area that I would be interested in. But you see this zone that was created here? That's another buy zone right here, 91.88 to 90.35. Um, on an earnings miss, a pullback into this zone would get me interested in watching for a potential buy, playing this out to December or January. All right. TSLL. We finally made it to the Tesla chart. Super excited about that. Now, let me go to the daily and then the 4 hour because the 4 hour is a chart I'm really most interested in trading. All right. So, your daily chart, look, even through Tesla earnings, TSLL has been chopping in an extremely tight range. All right. Basically from 17 and a half to 20 and a half, $3 range. This is where price has been stuck since the first of this month. Is it due a big breakout? Possibly. People have been waiting a long time for this one. All right. Here's my zone. This is the zone I want to buy the dip. Here's your lower weekly edge. Tesla showed some weakness on Friday when the market was making new all-time highs. You got imbalance down here. The Tesla chart looks the same way. I want to be a dip buyer 1872 to 1758. Now I know I have another zone right below here, but I'm not looking to hold uh, TSLL all the way through 1664. So what I'm going to do is wait for higher lows inside this zone on 30-minute candles. And once I get the break, that's when I want to take the trade. The most obvious resistance is going to be up here where we have an inside and down candlestick structure, upper weekly edge, then this bearish golden pocket targets to the upside on a trade that I would be interested in trading next week. All right. So TSLL is definitely one of my focus names. This zone right here is a zone in focus for me. Now, TSM has reported earnings, so I can look to trade it. It is a semiconductor stock. The semiconductor stock is hot, it's a relative outperformer, whether you're talking about this year, the last 3 months, the last month, or the last 5 days. Doesn't matter. Semiconductors are leading the way. All right. Where's my buy zone on TSM? Well, it's down here at 290 to 284.40. Here's your lower weekly edge. You can, and sometimes I do, scale into a trade that has a lower trendy edge inside of a buy zone. I will start the position here towards the top and then add the full allocation here towards the bottom. Targets are 299.38, 303.89, and then all-time high 317.10. I'm a buyer of TSM here and I am covering at these levels above. All right, TSM is on my focus list, and I will give you those 6 names in case you're not, for some reason, in the trendy room at Simpler, where in the notes section, I always put my focus trade charts in the notes section. So check those out in the room if you're a member. And if not, join us for this 30-day account challenge because right now Simpler's given some great pricing and deals on becoming a part of the Simpler community. All right. UEC, Uranium Energy. Reports earnings December 3rd. Got plenty of time here on UEC. This is the buy zone, 1240 to 1126. And these are areas to trim. Um, Now, your lower weekly edge on UEC is actually 1297. So if I use the lower weekly edge and waited for higher lows once price gets to it, then my total risk on this trade would be $1.70, and my total reward on this trade would only be about $1.50. So it's not quite a one for one risk to reward. That's why it's not on my focus list, but I do want to keep it here on the chart because if this lower weekly edge is breached and price gets below it, but we actually create higher lows inside of this buy zone back here, then I would go ahead and trade it up to the falling top of the cloud. I don't know exactly where it's going to be at that time, but where it is at, then I would have about $1 of risk, and the reward would be somewhere around $1.50. So that would meet my criteria. So it's not on my focus list, but it is in the back of my mind to possibly trade, swing trade. Into the challenge. All right. So I will recap the 6 names that I am focusing on for, swing trades this week, starting with TSLL on a 4-hour chart. Buying the dip 1872 to 1758, trimming 2085 and then 2142 to 2214, and finally targeting 2343 by 2571. That's my game plan for TSLL. On the focus list is also Abbott. Abbott would be a trade that I would be interested in trading from 125.58 to 123.25. Ta- Targets are 129.72, 131.16, and ultimately 134 by 136. All right. Cisco is the next name on my focus list, and Cisco's off of that daily chart. The dip buy is going to be here at the golden pocket. I showed you the 4-hour chart. I have inside and up candlestick structure there as well. So it would be buying the dip at 69.03 by 68.50 and trimming and ultimately targeting 71.86 by 72.55. Then up next is MP. MP is going to be an interesting one because it is right now right at that buy zone. This is my stop down here below 61.59. These are targets to the upside to trim along the way, and the ultimate target all the way back up here towards all-time highs. Then Newmont NEM is next up on the list. Sorry. The interesting name that I'm going to be watching very close on Monday to decide, am I trading from this zone or do I wait for this zone? Targets are 88.05, 93.46, and 98.58 NEM. And last but not least is Taiwan Semiconductors. Plan is to buy here at 290 to 284.40, trimming 299.38, 308.99, and 317.10. Thanks, buddy. Yeah, stop would be 284.40. So I hope this has helped y'all. I really enjoy getting together with you on Saturday mornings. I know it's super early, but again, if you're in the room, you have any questions about these charts, never hesitate to ask me in the room. I will put the charts in the notes section under Melissa's trade notes so that you have them to reference. As always, you never have to wait for me to take a trade. If you like the setup and you're okay with the risk, you can execute the trade as you see fit. I personally trade straight up calls and puts. I'm trading from a small cash account. And that means no spreads for me. But if you're a spread trader, look, in a buy zone, you can buy a call debit spread, you can sell a put credit spread. There's lots of options. So you don't have to trade it exactly like me, is what I'm trying to say. You use your trading methodology, like how you like to trade, whether it's seller of credit, or if you're like me and just like to trade directional options, buying calls or puts. I like to trade at the money, so I'm buying at the money. The most I will buy out of the money is first target. Uh, Stocks have to be liquid. I'm looking for a minimum of 500 open interests. I would prefer 1,000 open interests, and they have to be affordable for my account, which means they better cost less than $5 per contract. All right. I am, oh, yay, Anna Marie. Thank you. I'm excited to have you in the room for another year. Very cool. Oh, good. Yeah, that's why John threw that curveball, in there was for our SPX family so that they could get that renewal. So very cool. Karen, you're welcome. Thanks for joining me, guys. Y'all are the best, I love you. Trading is often a lonely journey. So if you're not a part of the community, come join us in the Trendy Trading Room at Simpler Trading. I will see you in the next video. Bye bye, guys.